In this video, I want to share with you the best order flow Forex trading strategy for 2022 and the 4 elements you must know that guarantees you that the order flow continues or where there's a potential reversal. So my name is Pedro and I help Forex traders on how to become profitable traders without the time suck and overwhelm. Let's dive into the charts because I'm going to share with you then the 4 elements. I'm going to walk you through a chart that I have, and so you can see it step by step. Let's go. So let's focus on this order flow right here. You can clearly see that there is an order flow, right? And we'll go over the 4 elements. Now, before we get to the 4 elements here, and so you understand how the order flow works, so you avoid having losses. So the first thing I look into, it's the points of interest. One of the things most traders fail to do is look at different time frames. So in this case, we're at the daily time frame here. And what I see here that I'm going to mark this point of interest. There's a lot of price action going, right? And you'll see a lot of price action down here too. Okay, now we're talking about the daily and the daily. Okay, so we're gonna focus here. Now, as you see here, there was on the daily, there was a big, bearish movement, right? And now what we see here is this retracement, right? There's this retracement to this point of interest. What I want to point out too, which is step number 2, it's this distribution. And I use this strategy called the banker strategy. What happens is the banks accumulate, they create traps, and they move the market, okay? So let's focus now here. There was a retracement to this point of interest. And now what happens is there was a reversal, right? We notice, and I just mentioned earlier, that on the daily time frame, there was an accumulation, right? Or distribution. And what the banks form this distribution, right? Up and down, up and down. And what happens is they're building liquidity here. They're building money. And as we see here, the next step you want to look for, again, number 1, point of interest. Number 2, you want to look for these banker box, these bankers. Basically, I have it marked as a box, but really it's just distribution, or it could be accumulation. So accumulation is when there is buying pressure and the market goes bullish. Distribution means there is selling pressure and there is bearish movement. But how do you know? Well, you don't know unless you follow the banks. We saw this distribution, and then there is this bearish movement, right? The banks created this down movement, okay? And in this amount movement, what we see here is what we saw here, and this is where the whole water flows begins. What we see here is a breaker structure right here. There's an internal breaker structure, okay? And then the breaker structure continues. But what happens is, so if we see this as a breaker structure, and a tip for you to see breaker structure, if there's breaker structure, you can make it change here in the trading view into a line chart. And as you see here, it broke this lower low. And what happens is, using the banker strategy, is there is this distribution, right? And then what happens is the banks move the market down out of this liquidity box, right? That we call it. And then you see a nice flag. No impulsive movements. We did have an impulsive movement here, right? As the banks moved away from this liquidity. And this is basically, it's creating traps. And now we're going to see an order flow. The banks came and mitigated this candle right here. Right, and these are a series of candles here, 4-hour candles. But if you put them all together, we call this the banker's candle. What makes this an order flow? So there was a retracement, and now what happened is we mitigated this candle, and now the banks broke again this lower low. So what tells me that the banks are continue to take the market down is that there's this breaker structure here. This breaker structure, it broke this lower low, right? It created a lower low, and now there was this flag up right until this candle right here, right? This candle, which was the last candle, it mitigated this banker's box that was created in a point of interest. It mitigated right here, right? The banks came and took a lot of the orders, so they would not be in a drawdown because they weren't drawdowns. They had to go get their money, can move the market down, and now there was a nice another retracement right into this banker's candle. A banker's candle is the last candle up before the down movement, or it could be the other way around if it was going on an uptrend. So now, as you see here, now there was another distribution, right? There's another breaker structure right here, right? But what tells me that the market was continued to go down, it was this, more importantly, it broke this lower low. But even if you just follow this, it broke this low, this distribution. The banks again drove the market down and again came up to right here, right, to this banker's candle right here. What happens if the banks were to break this structure right here? It would tell me that the banks want to take them, would be going on an uptrend. But no, it didn't break the structure. In fact, it came down again because it respected this lower low, and more importantly, even this lower low, which is right here, right? It could continue this order flow. So as you see here, it continued to follow, right? It mitigated this banker's candle. There was another breaker structure right here, right here, another breaker structure. Look at that. Now, so it broke this structure, right? And look at right here, another banker's candle. So it broke this structure. It continued to go, and then it nice with a nice flag up again to this banker's candle right here again, right there. And this will continue, right? This continues right here. Now there's another breaker structure, broke this structure right here again, because remember this candle, this one was mitigated. This one is mitigated right here too. This one is mitigated. This one is mitigated by this one. Why? Because it broke this structure, internal structure. Now that's why this candle is mitigated, right to the pip. It broke down, right? It came down. Now there was a retracement to this candle right here. And look at that, to the pip, and then continue to break structure, right? And this continues on this flow. This happens on whether you're on a daily, in a 4 hours, in a 1 hour, in a 30 minutes. So if you're new or intermediate trader, I recommend you be on a daily or 4 hours. And these order flows, they continue as you see here, right? It broke structure. Look right here. It came and mitigated this one. It broke structure. It came and mitigated this one. It broke structure right here. It came and mitigated this one, right? It broke structure right here. It came and mitigated this one, this candle right here, the banker's candle. So what tells you that order flow is going to continue is that breaker structure. If you like what you see, you want to learn more about what I just shared with you, check the strategy. There's a link somewhere in the description of this video. Click the link, check your Facebook inbox, and I'm going to deliver it to you to learn about how this banker strategy works step by step. I hope you enjoyed this video. Be sure to click that subscribe button so you don't miss any additional trainings and videos I share here on the YouTube channel. Be sure to watch the next video, which talks about what liquidity is, where can you find it, how to understand it step by step so you can have more wins and avoid the losses. And I'll talk to you very soon.